Well, let's bring in John Grace, joining us from LA. He's the founder and president of Investors Advantage Corporation. John, good to have you with us. Now we have China saying they want more time before signing phase one of this deal. Is this Beijing playing for time again?
Oh, absolutely, without question, because they can. And if we could, we would. And they don't have to worry about timelines and people who vote for the president, right? The dictator stays in place no matter what happens, as long as he satisfies his hierarchy.
Okay, but in exchange for the deal, the U.S. had previously said that it won't increase the duties on $250 billion worth of Chinese goods. That's expected to go up from 25% to 30% on Tuesday. Do you think that the Trump administration is still going to go ahead with those hikes tomorrow, and should it?
Well, I don't think they will. I'm not even sure they will in December. It's an interesting way of doing business from the standpoint of you say one thing on one day and then you change your mind the next. And I think that makes it very difficult to negotiate with anyone where you can't see any consistency. So, as I say, I don't think it may not be that you see either one. Who knows how that might turn out, but it makes sense for investors to be prepared nonetheless.
How should investors be prepared?
Well, I mean, we might see a gain of 27% from here, where there may be some real green shoots, not just promises, but actually a deal cut. I mean, right now we have nothing other than President and Larry Kudlow saying, pay no attention to the man behind the curtain. Everything is just fine. On the other hand, it could be a decline of 27%. We certainly saw that just, a year ago, just about this time.
Either or. So how do you prepare if it can go either way, according to your analysis? Is there a
there's
safe
three
hedge
ways.
bet?
Number one, number one, Michelle, you want to understand what kind of loss you can accept. That's a question. It's not about being moderate, conservative, or aggressive. It's what kind of loss can you live with? Is it 8%? Is it 40%? That's number one. Number two, we think that active management strategies make all the sense in the world, where they can take money off the table out of risk assets in a bad year like 2008 and double down in a good year like 2009. That combination could have limited losses to, let's say, 20% or less. You get all the gains of 25% or more, and you're ahead of the curve, as opposed to what happened for most people, where it took 4 to 5 years, as we saw it, for them to get back to even in traditional assets that effectively stayed invested.
All right, let's focus a little bit more on this deal. I want to focus on diversification, always a good move. The deal is said to include a pledge from China to buy more U.S. agricultural products and, more importantly, address the concerns over intellectual property. As we know, John, this has been the big issue. Do you really expect there to be a deal where all of a sudden Beijing ends this practice of forced technology transfers? Realistically, when we say address intellectual property violations, what do we really expect Beijing to agree to, and then more importantly, follow up on?
Well, where are the limits? What are the agreements? But let's just understand something. If you know me to be a habitual liar, do you think you're going to cause me in any kind of fashion to change my behavior? So if this is the way I operate and you and I have to do business together, it may be helpful for you to recognize that you're not going to talk to another adult and tell me to kiss your ring, and I'm going to tell you in a couple of words what I think of that. So, we have to recognize what we're dealing with and see how it might be that everybody wins, as opposed to.
I'm not sure who is the habitual liar
in
this situation, in this analogy, because
I'm just saying by example. If the Chinese are cheaters, for example, I'm using myself as saying that I'm a habitual liar. All I'm trying to say, if the behavior is so entrenched, it's not another adult's going to make that person change their behavior.
Well, then there should be some kind of enforcement mechanisms.
Absolutely, but that should be part of the agreement, so that you know that I'm working within the confines of our agreement. And we also understand, in the event that I don't keep my promise, you see what behavior or what action is going to be taken, and I agree to that as well, to pay the price for not keeping my word.
All right, John, changing gears here, quite literally. Uber has laid off around 350 employees across a variety of teams. The stock closed up today, 3.3%. What's your read?
Well, it's an interesting kind of situation. If you look at it from the standpoint, if they haven't made any money. In fact, I think August quarterly, they were off like $5.2 billion in the red. At the same time, they have, 100 million app users. around the world. It's kind of strange that an app consumes all this kind of capital. On the other hand, if we look at the founder, CEO, I believe, a Muslim wealthy family, he came here to the U.S. And his vision is to just do all the deliveries for everything so that people can be very satisfied. And this seems to be very high priority right now for you to get your deliveries of whatever it might be in the span of 2 hours. So he's looking at, making that kind of arrangement, much like UPS around the world, around the neighborhood, and then looking at getting you on bicycles and getting us into vertical flying, like, cars and airplanes that can take off and land and shuttling us to the airport. So he's really having a visionary kind of experience, if you will, to make sure that they can get to the kind of future
would you
that
buy
they
the
really
stock
want
at this
to
point?
make sure happens.
Yes or no? Would you invest in it?
Well, I'm not an advocate of any individual stock. I don't know if it's going to be another Enron. That's why I say to folks, be careful, because there's just some of the details that you never know.
I'll take that as a no then.
Would not be...
Thank you, John. We're out of time, John
Fair enough,
Grace.
Michelle.
Thank you so much.